Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Wednesday the 19th of December 2018. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @ds_Pepperstone. As ever, let's kick off with a look at the overnight changes and price moves to be aware of. But let's do a little bit of housekeeping first. Please note we'll be taking a break from the daily update videos over Christmas week and we'll be returning on the 2nd of January. Okay, so changes. Well, a little bit of pushback from some of the majors against the US dollar. Modest gains for the euro, the pound sterling, both the Aussie and New Zealand dollars. A better performance from the likes of the Indian rupee, however, which gained 0.73% back against its US counterpart yesterday. Dollar index for its part, I should say, back on the back foot, down by 0.06%, but perhaps more importantly than the move, back below that key 9700 handle that we seem to toggle around for much of the last 6 months. Bitcoin and Ether had a slightly better day, up by around 1.6 and 1.77% respectively. Okay, what's on the calendar then? Events that may move the markets today. A pretty busy calendar today, in fact, and we kick off at 09:30 GMT this morning in the UK with a raft of inflation data for the month of November. We should have retail price index and consumer price index measures across the month of November, and plenty for us to get our teeth into as we try and assess demand and pricing pressures in the UK High Street and elsewhere. Then we take a break till 13:30 and cross over the Atlantic to Canada for a similar set of data, consumer price index and Bank of Canada CPI data being released then again for the month of November. Half an hour later at 1400 we get a window on the performance of the Swiss National Bank, which some would describe as a hedge fund masquerading as a central bank, and it's their quarterly bulletin about their investment performance. Always an interesting read. Then at 1500 we have existing home sales data out of the USA for the month of November, and then we pause until 1900 hours GMT this evening for perhaps the most important decision and data point of the whole of the month of December, and perhaps for the whole of 2018, the Federal Reserve Open Markets Committee interest rate meeting. The decision on interest rates is released at 1900 hours, and then 30 minutes later we shall have the FOMC press conference, a chance for Jerome Powell to explain the decision and to talk about policy going forward. After that, we jump across the Pacific to New Zealand for trade balance data for the month of November, imports, exports, year-on-year and month-on-month data released there. And then at the same time, GDP data, both year-on-year and quarter-on-quarter for the third quarter, i.e. Q3, again out of New Zealand. And finally, to round the proceedings off, we shall have foreign bond and foreign stock investment in Japan for the week of December the 14th. Okay then, breaking news and comment that's caught my eye overnight. And first of all, gold has edged towards its 5-month highs and the yen has firmed ahead of tonight's Federal Reserve interest rate meeting. Markets are somewhat nervous that the Fed could still skip a December rate rise. Unlikely, but not impossible. They're also concerned about what Jerome Powell may say in his speech about policy going forward. Meanwhile, in Japan, imports have surged and growing by some 12.5% year over year in the November data, and taking the country into trade deficit for last month. Exports grew by just 0.1% during the month, however, so you can see a sharp swing round to import growth in Japan. Not really what the Abe government or the Bank of Japan will be looking for, and they'll hope to right that in the coming months. Germany is to review foreign investor rules and limit purchases of stakes in what it calls strategic companies without review to 10% from the current 25% threshold. That tightening of legislation there predominantly aimed at Chinese and other Asian buyers, and will be very interesting to see if other European countries follow suit. Okay then, food for thought, something to take away with you into the trading day and beyond, and why not think about this? Debate continues about how close we are to the next US recession, and of course that's part of the reason the markets are nervous about what the Fed will do this evening. It has been 10 years since the global financial crisis, and it seems timely to remind ourselves of how harsh the recession was that followed. This is US data, but nonetheless it serves to show just how powerful the forces at work were then. Over that period of the GFC and the Great Recession, GDP in the US shrank by 4.7% 8 million jobs disappeared. $17 trillion in household net worth evaporated. Home prices plummeted 32%. There were 8 million home foreclosures, and retirement account assets in the States fell by $2.8 trillion. Just some of the data from a very interesting piece about market performance in the GFC from the US fund manager Vanguard. Okay, please take a moment to read this risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of leverage products for you, then please do contact your Pepperstone account representative, and do take the time, please, to read this risk warning thoroughly. Thank you for your time today.